Hi, and welcome back to STR Jumpstart. When you're evaluating a short-term rental, the numbers can get overwhelming pretty quickly. There are a lot of different metrics out there and a lot of different opinions on what matters most. What I want to do in this video is to simplify that. And I also want to give you a slightly more complete way to think about your investment. My background is engineering and operations, as well as financial modeling. So when I started investing in short-term rentals, I naturally approached it the same way. I didn't just want to know what a property would do this year. I wanted to understand what it would do over time. That's something that I see missing a little bit in this industry, and that's where I think there's an opportunity for most investors. A lot of people focus on cash return, which is a great metric to start with. It tells you how your cash is performing from an income perspective, and that's important. But for me, that's just one piece of the picture. I like to look at an annualized rate of return that tells a bigger picture over time. It brings everything together, not just your cash flow, not just what's happening on the surface, but also your equity growth, your loan pay down, your long-term value, what's happening over time. It gives you a much clearer picture of how your money is actually working for you, both on the surface and underneath. So in this video, I'm going to walk you through the 5 metrics that I personally use to evaluate every deal and how I use them long term, how they fit together so that you can make confident decisions both when you're buying a property and then when you're actually using one long term. I built my own financial model for this, what I call the profit planner. I use it all the time on my own properties. I do sell it as well as part of STR Jumpstart. I couldn't find anything that quite worked the way I wanted it to, so it's a long-term financial model. I wanted something that was simple, but also gave me a full view of how a property performs both on its own and within a portfolio. I want to know every day whether my properties are outperforming the stock market, very simply. These 5 metrics are really the foundation of that, and they answer 3 very important questions for me all the time. Will this property pay for itself? Very basic. Will it grow my net worth over time? That's something very important to me, month by month, year by year. And is it a better use of my money than other options? I mentioned the stock market earlier, but all other options I want to know. If you can answer those questions clearly, you're in a very strong position as an investor. You should always kind of know how your money is working for you. So let's start with the first metric, and that is cash flow. Cash flow is the one most investors know best, and of course it matters. At the most basic level, it is the money left on the table after your income comes in and your expenses go out. For a short-term rental, that means revenue minus operating expenses, minus your mortgage if you have one as well, and minus the normal costs of running the property. So cash flow tells you whether the property is supporting itself today. Believe it or not, that's way harder to do than it used to be, right? Can it pay the bills? Can it create income? That matters because I want a property to function as a business, but I don't want it to stop there because cash flow is obviously only one part of the return. The second metric that I look at is added equity. That's the growth in your ownership position in the property over time. That can come from appreciation in the property, but it can also come from improvements that increase value, right? If you do a rehab on a property, something like that. Real estate is not just an income play, it's also a wealth building tool. So I want to know not only what the property is paying me now, but also what it is helping me to build over time. The third metric I use is yearly earnings. This is something that not a lot of people talk enough about, in my opinion. I want to know what I'm making every year. I think that just feels good. This is where I bring the pieces together. Yearly earnings includes cash flow, appreciation, and mortgage paydown. Those are the 3 pieces that I use on my chart. I want to look at it every year, and I just want to know, what am I making? I want to look at the property, see what it did for me this year, not just in income, but in total wealth creation. No, it's not something that I'm getting a check for every year, but I love the metric because it gives a more complete annual picture. If you only look at cash flow, you can miss the fact that the property may also be growing your equity every single month. The fourth metric I use is exit value. This is an important one that a lot of people don't talk about enough. This is the amount of money I would walk away with if I sold the property after selling costs and after paying off what I still owe. I think this matters more than people realize because you need to be able to make decisions at any time, right? A property is not just a monthly income stream. It's an asset. And part of understanding an asset is understanding what it might be worth to you when you exit. And then the fifth metric, and really my favorite, the most important metric, is the annualized rate of return. What's it making you? Cumulative earnings divided by cash invested divided by years invested. This is the number that just pulls everything together very simply for me. It takes the full benefit of your investment over time, helps me evaluate how hard my money is really working for me each year. It includes cash flow, equity growth, mortgage paydown, and long-term value. And this is why I like it so much. It's very simple, but it gives me a fuller picture than any other one metric on its own, and it helps me compare it to the stock market very simply. So it's the one that I really like to use. It's how my model works, and it tells me every year annualized return is that wider lens. Cash on cash tells me part of the story, but annualized return helps me see that whole story. That matters to me the most because I'm a long-term investor. I do not just want to know what a property is going to do for me this 1 year with my cash. I want to know what it's going to do for me in 10 years, 12 years, 15 years, 20 years, to be honest. I want to know whether it's paying for itself. I want to know whether it's growing my net worth. I want to know whether it's a strong use of my capital compared to other options. I want to know whether I should be selling it and invest somewhere else, right? Those are the questions that I really care about. And these 5 metrics are the questions that help me answer them. This is also how I track my properties. Like I said, year after year, I do not just use these numbers when I am buying one. I use them all the time. I put my actuals in every month and I measure performance once I own the property too, using these exact 5 metrics. Because better tracking leads to better decisions. It helps you to see what is working, where you can improve, and whether a property is still doing the job that you want it to do, that you bought it to do. That is exactly why I built this profit planner that I was telling you about. I wanted one place to see the full picture. It does comparisons to last year to last month. It doesn't just do the cash flow, but the full return on the investment. Because when you can see the numbers completely and clearly, you can make much better decisions in your business with a lot more confidence and clarity. It's just taking my whole background from operations and putting it into this one tool is what helped me a lot to do this. So if there's one takeaway from this video that I hope you take, it's this. Don't stop at cash flow. It matters, but it is not the whole picture. Look at what the property is doing for your income, your equity, your exit, and your long-term return. Definitely look at it over a long term. When you do that, you start investing with a much more complete view, and that is where better decisions happen for your long-term value for your life. If you'd like to learn more about short-term investing, check us out at strjumpstart.com. We've got a full masterclass there, or there's a free webinar about what investing could look like for you, and I would love to teach you more. Thanks. See you soon.